Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm here, as usual, talking to you from New York City on July 2nd, 2019. And we always like to remind you that I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, and you can sign up for that letter by going to miningstocks.com. We want to thank our sponsors for making the show economically viable. Our sponsors for today's show, Klondike Gold, Novo Resources, RN Resources, Strike Point Gold, and Radisson Mining Resources. With regard to Radisson Mining, I would like to mention a fact that was missed last week when I interviewed Hubert Parent-Bouchard, of that company, of Radisson. He wanted me to note that, in fact, the company's management owns a big chunk of the company. It's about 13%, which is a good size interest, and we always like to see companies, the managements of the companies that we recommend having some skin in the game with these young companies that are really very very early on and a lot of risk involved. So if the management's ready to put their skin in the game, that's a comforting thought. At least it doesn't guarantee anything necessarily, but it's better to know that their actions will cost them something if they don't work out than if they're just playing with other people's money. So anyway, that's one of the positives for Radisson, and Radisson is up nicely today, as are most of the gold stocks, given the really nice move in the price of gold today. I wanted to mention to you that we're going to have Michael Oliver with us in just a moment, but today's show, the title of today's show is Adjusting Investment Themes to a Weaker Dollar. David McAlvany will be with us in the second half of the hour. John Tomazos, who's been with us once or twice in the past, one of the leading mining analysts on Wall Street through over many years, he'll be with us in the second segment, and Michael Oliver is with me now. The last time I talked to David McAlvany of McAlvany Wealth Management, he was of the view that the dollar was likely to get weaker, and he was turning pretty positive on gold. And we'd like to ask him, when we talk to David this afternoon, why he thinks that the dollar is going to be under some pressure. And obviously, since he made those remarks a couple of weeks ago, gold has really performed very well. It got smacked down pretty hard on Monday when it seemed like there could be some peace evolving between China and the United States from the G20. But that, of course, has changed. We saw today gold is up to over $20, $23 or so before the start of today's show. But anyway, Michael, we have John, as I say, John Tomazos will be with me. He's really hot on iron ore right now and on the steel industry. John tracks the steel industry, and he'll explain where all the demand for steel is coming from and why the iron ore miners have done extremely well. And we want to find out from John whether he thinks, they've had quite a good run, so is there still more to come, or is the run pretty well over? We'll try to find out from John what his views are on that. But right now we have Michael Oliver, and it's so good to know that he's with us once again. Thanks for joining us, Michael.
Hi, Jay.
I want to ask you about the dollar. I know it's not the market that you're most focused on at the moment. You have been somewhat bearish on the dollar. Do you see it sort of meandering around for a while, or do you see some weakness right ahead, or what's your view on the dollar
I
now?
think the recent weakness we've seen last month from the highs we made a month or two ago, talking dollar index now, up above 98, and it dropped down to under 96. Did it pretty rapidly. That break, though on a price chart, doesn't necessarily upset most people. From our momentum point of view, we broke too much stuff over the last few weeks. Now, we also look at quarterly momentum, which is a long-term metric, and we prefer to see monthly closes below trend structures on that particular time scale. And frankly, you're trading at levels now you can't close the month here because you'll be blowing that stuff out to the downside and adding to the negative technical. So, we think the dollar has crested the secondary high. Its high of recent years was $103.50 on the dollar index, and our recent rally high was 98.20 area. And now we're trading down about two full points below there. So we think that secondary rally is now over. It did take its time. And what's most interesting that gold people should pay attention to, who are believers that if the dollar is strong, gold can't go up, is that the dollar index was at 97 on a sharp rally in August of last year.
Mm-hmm.
And basically from August of last year through last month, it was trading at or above or just below that level. You could draw a sideways line on the dollar. So it wasn't doing anything except holding its gains. And yet gold went from the 1100s to 1400. So if you're waiting on the dollar as a signal indicator for gold, you missed one heck of a move.
Yeah.
Now if the dollar weakens, I think it'll add some wind at the back of gold. Now, I think it will weaken. But it's not the only thing, okay?
No.
If it were, then gold wouldn't be where it is now.
Yeah, for sure.
And the stock market, I think, is also very pivotal here, especially U.S. stock market. S&P 500, we watch that, and NASDAQ 100 very closely. And this rally we had on news, headline news, buy the news, right? Okay?
Yeah.
If you did, you bought the S&P at the peak Monday morning at 2977 cash index. And we're trading 10 or 15 points below there right now. No big deal. Didn't collapse from that level. But it was interesting that day that they bought the news and went back into, quote, risk on, that T-bonds and gold, while they dropped, they immediately gained it back today. T-bonds are pressing at their highs, and gold's back near its highs. And the S&P's steady today. So how come it is that gold and T-bonds, which are inverse to the S&P and perceived as risk off, how come they're back near their highs?
Yeah.
Everything's so glorious with the S&P. Well, I think the possible reason is that the trade tariff war coming off of the headlines and being retired as a scary dark cloud potentially removes one of the things that Powell has been talking about, and that is the Fed is concerned about the uncertainties, and that's a big uncertainty, and that could disturb the economy, and therefore the Fed has to watch that China thing. Well, if the China tariff war is off now, or at least put in the back burner, then one of those uncertainties is off the page, and therefore the Fed has less reason to cut rates. So think about that if you're long the stock market. The good news about the tariff war is also inversely impacting the S&P based on the rate outlook, the Fed not moving quickly.
Yeah, so, it's a strange world.
Yeah. S&P I'd watch very closely here. I don't think it can afford I would say even a 1% drop from here. If you drop about 1%, we put out a report today with very specific numbers. I won't reveal them, but basically you can't afford to wobble here if you're long, because there's some stuff you're going to break that could get this thing rolling on the downside again. And that's just what the bulls don't want to see. They've seen so many umpteen new marginal highs over the last year or so that don't go anywhere. That pretty soon they may give up on it.
Well, yeah, you would think so. It looks like a gigantic topping process that's been going on for the last, couple of years or so, it seems. And I've seen these patterns before. It seems like not very positive. I want to ask you about, I think you indicated that you did some, you looked very quickly at a couple of iron ore companies, and as I mentioned in my introductory remarks that we're going to be talking to John Tomazos, he's seeing the iron ore markets just on fire. What are you seeing with a couple of the major iron ore companies?
I ran, before we came on, I ran BHP Billiton and Rio Tinto. And they're both quite strong, but their breakout levels, from our vantage point anyway, were many months ago at much lower price levels. So, if you're already in, fine. It looks like, frankly, there could be some more upside. But it's not, from our vantage point, and again, looking at two of the leaders, we see it as an extended move that really began from much lower levels, and so it's not a place to initiate brand new positions, in our view. It doesn't mean it can't go higher. It's just, the ground level, entry level has been passed, and now your risk reward is shifted. I'm not saying they're topping here, but they definitely have had a good run, and that should factor into anybody who wants to. Now, there may be some market symbols within this sector that have not had a good run. Vail, for example, has been under pressure for various reasons unique to itself. And there's some probably lesser iron ore companies that might not have done what BHP and Rio did. But it's one of these situations where, yes, it's positive, but it's not ground floor entry level.
Okay, Michael, what about GDX right now, getting back to the gold sector? And you've indicated before you think that we'll really see the gold shares start to gain some strength if the equity market in general gets weaker. People will be looking for another place to put their money where they can make some money. What are your thoughts about GDX right now?
Well, our technical work on GDX has validated what we've been saying for many, many months over the last year or so, that when the gold bull gets reborn again in the way that the public sees it as reborn, and that was in crossing that mid-1300 level, that woke most people up finally who only look at price charts. What happened to GDX doubled and better what gold did. And the spread relationship between the miners and gold has now broken out of a multi-year basing action, indicating that we've just begun the shift such that the miners, which have been weaker, anemic compared to gold over the last couple of years, that's changed. And it changed like a light switch, and it changed several weeks ago. And we think, therefore, going forward, the better place to be in the gold sector are the miners. At this point, the major miners be reflected by GDX. The junior miners are still lagging, but I suspect at some point, as we gain more and more strength in the gold market, that lesser sector will rise as well in terms of relative performance to gold. But it's evident to me, at least, that I can't see who bought what, but the money flows into the gold miners has changed dramatically over the last 4 weeks. You can see it on a price chart. It's like they stuck a cattle prod on it. It just went vertical. Went from just above 20 on the GDX up to over 26 in 4 weeks.
Yeah, tremendous flows of money going into the gold ETFs, I know. That's really interesting. And is there any hope at all for silver?
Yep. In fact, we're not crossed the numbers yet. We have some very specific numbers above the silver market, a handful of percentage points, and we've defined them and adjusted them for the new quarter. That if silver engages those numbers, we think silver will bolt higher dramatically and with a tone that it has not exhibited in a long time. So like a light switch again, just what GDX did over the last 4 weeks, I expect that out of silver, and I think silver will at that point in time, when we cross those hurdles and their momentum-based trend structures, when we engage those structures, I think silver will just become a different animal and become far more violent on the upside. And so it should be like a light switch event where people who are accustomed to seeing silver behave in a certain way will be shocked at what happens. And I would say it's almost an inevitability. When I see these type of momentum bases built, as silver has, it's a base that basically I would say is inverse to the topping pattern in 1929 on the Dow and the topping pattern in 87 before the crashes. It is a very potent looking structure.
Yeah. All right. Well, we'll have to leave it go at that. It's an exciting time. It's olivermsa.com. And folks, now that gold and silver are starting to really catch on, you might want to consider taking out Michael's subscription that focuses on the gold and silver sector. You might also add that there are a lot of several silver companies that I'm extremely bullish on that I'm following in my newsletter. If you want to take out a subscription to my letter, I think you'll be very pleased once these markets really start to turn. And there aren't that many silver producers, but there's a couple that I track that are really, really good and very much under the radar screen of most investors. Michael, thank you so much for being with us again. Always a pleasure having you.